Spring is here. And that means first quarter industry reports are dropping left and right. So today we bring you crypto's Q1 by the numbers, courtesy of a new report from one of the best research teams in all of crypto. They've given us the facts and figures to address the questions that matter most, like when altseason, will Ethereum survive Q2, and how did DeFi and AI underperform Shiba Inu? This is a report you don't want to miss. My name is Guy, and you're watching the Coin Bureau. Today's report is the 2025 Q1 Crypto Industry Report from CoinGecko. Now, these guys should need no introduction, but if you're new here, CoinGecko is one of the best resources around for live crypto market data. Prices, volume, trending tokens, you name it. CoinGecko also has a top team of researchers who put together a quarterly report on the state of the market and all of the most important events that happened over a 3-month period. Now, we read a lot of these industry reports, and CoinGecko's is consistently one of the best. That's why today we're bringing you the highlights from their first installment of 2025. So, let's dig in. I'll begin with one of the most important metrics in all of crypto: Bitcoin dominance. With BTC maturing as a macro asset, the crypto market is more bifurcated than it has ever been. In other words, there's BTC, and then there's everything else. This has always been true to some extent, but what's remarkable about the current trend is that the glut of new altcoins that launched since last year failed to even dent Bitcoin's dominance. As the number of altcoins vying for attention and liquidity increases, you might expect them to collectively eat away at Bitcoin's share of the crypto market. But the opposite has been happening, as BTC dominance has remained in an unbroken uptrend since September 2022. Q1 of 2025 was no different, with Bitcoin's dominance rising by 4.6 percentage points. That's a bigger market share increase than any altcoin saw in Q1. According to CoinGecko's report, BTC.D ended March at 59.15, a level not seen since Q1 of 2021. It's worth noting, though, that this is significantly lower than the number you can find on TradingView, which instead shows that BTC.D closed the monthly candle for March at 61.59%. We're not quite sure why this discrepancy exists, but, well, either way. Anyway, after reaching a 4-year high, you might expect Bitcoin dominance to pull back a little in Q2. But again, that's the opposite of what happened. BTC.D instead broke out to the upside, and at the time of making this video, TradingView shows it teetering on the edge of 65%. Altcoin holders will be praying for BTC.D to top and then suddenly fall off a cliff, because that will mean the sacred alt season is upon us. But as long as the uptrend persists, it can only spell bad news for altcoins. And speaking of bad news for altcoins, nobody had a worse Q1 than ETH. For the 40 months between May 2021 and September 2024, ETH's share of the overall crypto market ranged between 15% and 22%. It spent most of that time at the higher end of that range, around 19%. But something snapped last summer as ETH dominance began a rapid decline that took it to a low of 7.9%, according to CoinGecko. This, the report points out, marks ETH's lowest share of the crypto market since late 2019. We can see on TradingView that ETH dominance has fallen for 16 of the last 22 months, amounting to a 67% drop since July 2023. Now, of course, this is in large part due to the increase in the supply of altcoins since then. But one has to wonder how low this chart can go. April's monthly candle includes a wick below 7%, which, as far as we can tell, is literally a new low, unprecedented in the history of Ethereum. ETH BTC has been trading at extreme discount levels since last summer, but with a market cap well above $222 billion, ETH still doesn't exactly look cheap. It feels like just yesterday that crypto Twitter was fixated on the 0.03 level as ETH's last line of defense, but that snapped like a dry twig in January. 105 days later, ETH BTC has fallen by a further 41%. The chart last bottomed in late 2019 at around 0.016, and ETH is now within sneezing distance of that level. If ETH doesn't reverse there, it could fall to below 0.01. If ETH doesn't reverse there, it could fall to below 0.01, a region not visited since January 2017. Thoughts and prayers, everybody. Thoughts and prayers. Unsurprisingly, ETH betas, including DeFi blue chips like Uniswap's Uni and Aave's Aave, also took a battering in Q1, falling by 55% and 48% respectively. And this makes Uni the worst performing DeFi token of the year so far.
Apologies for the interruption, folks, but I very quickly want to tell you about the Coin Bureau deals page. Now, if you're interested in things like discounts on hardware wallets, money off trading fees, and exchange sign-up bonuses, then the Coin Bureau deals page is absolutely the place that you need to check out. The link is in the description below. These are some of the best deals and promos in all of crypto, so check it out when you have a moment. Okay, enough from me, back to the video.
Now, if ETH looks like a nerd who lost a fight in high school, Sol is supposed to be the jock who torments it for fun. This was the vibe last year when Solana was riding high on meme coin mania and outperforming most other major altcoins, but things took a turn for the worse this year. The meme coin supercycle narrative was best described by Murad Mahmudov, the Goldman Sachs analyst turned full-time meme coin evangelist, whose meme portfolio reached almost $60 million last year. He explained how the likes of GigaChad, SPX 6900 and Popcat were new cultural movements that filled the void in modern life once occupied by religion. Well, perhaps Popcat falling by 94% between November and April was a test from the Almighty then. Murad's portfolio fell to almost $10 million during the meme coin massacre of Q1, but it looks like he kept his faith. Anyway, meme coins are divisive at the best of times, and there was growing discontent with the relentless PvP struggle that Pump.fun brought to Solana last year. Some of those who launched tokens on Pump.fun performed desperate and licentious acts on video to draw attention to their tickers. Bears and people of good conscience would say that they were all destined for zero, but few could have imagined just how this ended up happening in 2025. What began as a niche of meme coins lampooning American politicians during the 2024 presidential election somehow turned into governments and heads of state themselves promoting and launching their own meme coins on Solana. Donald Trump's launch of the Trump meme coin 3 days before he was sworn in as the President of the United States was a seismic event for the crypto market. Virtually every other crypto dumped as liquidity rushed into the President-elect's meme coin, sending it to a high above $77 on the eve of his inauguration. The top came, however, when Melania Trump announced via Twitter, quote, "The official Melania meme is live. You can buy Melania now," in a post that was retweeted by Donald Trump. This caused Trump to collapse by 40% in a matter of minutes. Melania also rugged up soon after launch. Now, this series of events was a blow to crypto in general, and Solana specifically, but most of all to Solana meme coins. In the week of Trump's inauguration, the value of Murad's portfolio fell by $16 million. It was all downhill from there, as Trump's inauguration proved to be Bitcoin's macro top for the year to date. Argentina's President Javier Milei kindly stepped up in mid-February to give us a hand on the steep scramble back down when he promoted a pump and dump scam on Twitter, telling the world that it was an investment in his country's economy. This was Libragate, in which a cartoonish family of crypto crooks allegedly bribed their way into Milei's inner circle. Shortly after Milei's tweet, they rugged the token, causing its market cap to fall from a peak of $4.6 billion to $221 million in a matter of hours. Now, the story of Libra only gets weirder from here, so I suggest you check out our full video report if you missed it. Long story short, the fallout led to allegations of rampant insider trading on Solana's DEXs, not only by meme coin pushers, but by the people behind the DEXs themselves. One DeFi founder close to the situation compared the scale of the alleged crime to the FTX debacle, but, well, we'll leave it to the courts to find out whether that's true or not. For the time being, the Trump-Melania-Libra trifecta is a painful memory for Solana and for meme coin bulls. But this time, the debauchery on Solana could not be contained to just crypto Twitter, as the world's media marveled at the presidential meme coin spectacles and started asking if there might not be any conflicts of interest involved.
That's a conflict of interest.
Anyway, CoinGecko's report shows how activity on Pump.fun cratered after Libragate. The number of tokens deployed on Pump.fun peaked at almost 73,000 in a single day in January 2025, with the highest graduation rate recorded at 1.76%. For reference, this means that 1.76% of these tens of thousands of tokens deployed via Pump.fun made it onto a Solana DEX. A sharp decline in activity in Q1 brought these numbers to lows of around 17,400 tokens deployed, and fewer than 0.5% of them graduating in one 24-hour period in March. And this was not good news for the price of Sol, as a key source of demand suddenly dried up. After ETH, Sol recorded the second largest loss among the top 5 cryptos in Q1, with a quarterly return of minus 34.1%. In January, Trump's meme coin propelled Sol to a new all-time high of $293, as 24-hour trading volume soared by $28 billion. But by early March, Sol had fallen to as low as $115, and volume continued to slide, reaching just $1.6 billion on the 30th of March. Meanwhile, the top 5 memes by market cap fell by around 40 to 60%, including a 64% haircut for Ethereum's Pepe. Notably though, the 2 top memes, Doge and SHIB, outperformed not only other meme coins, but also DeFi and AI coins. Oh, and ETH. So, for example, you would have been better off holding Shiba Inu SHIB throughout Q1 than ostensibly serious projects and utility tokens like Tau, Render, Near, ICP, Aave, Ondo, Hype, and so on. Now, this is pretty interesting considering that DeFi and AI cryptos didn't suffer catastrophic reputational damage the same way meme coins did in Q1. As I mentioned, Uniswap's Uni fell by almost 55% in Q1, and this was despite Uniswap enjoying a very bullish catalyst in the form of the SEC dropping its investigation into Uniswap in February. We're not sure what Uni's excuse is, but one explanation for these blue-chip DeFi and AI cryptos underperforming Doge and SHIB is simply that they are, well, much smaller in market cap terms. Doge and SHIB are, to all intents and purposes, majors, and therefore in a different league from the rest of the meme coin market. DeFi and AI altcoins, though, are typically more volatile because less money is required to move the needle, so to speak. That makes sense. But hang on, if that's the case, then why did SHIB outperform ETH? All right, I know, no need to flog a dead horse. But, you know what, there may still be hope for Vitalik's chain, at least vis-à-vis Solana. CoinGecko's breakdown of DEX trading volume by chain reveals a dramatic reversal of fortunes in Q1. For context, Solana flipped Ethereum for DEX trading volume in 2024. In Q4, Solana attracted $217 billion in trading volume, giving it a 31% share of the on-chain trades among the top 12 blockchains, comfortably above Ethereum, which had a 25% share. The gap widened dramatically in January as the Trump effect caused Solana's market share to spike to 52%. This came somewhat at the expense of Ethereum, whose share fell below 20% for the first time ever. But by March, Solana's share had collapsed to just 23%, and Ethereum was back on top with 30%. If you're bullish on ETH Sol, then you're going to want to see this lead hold and not disintegrate on contact with the next meme coin rally. It'll be interesting to see how these numbers change over Q2. As it stands, Solana still comes out on top at the end of Q1, with quarterly trading volumes up 35.3% to $293.7 billion and an overall market share of 39.6%. Speaking of DEXs, the top 10 recorded a collective $700 billion in spot trading volume in Q1. Now, this is up just 6.2% from last quarter, but almost double the $357 billion recorded in Q1 of 2024. Spot DEX volume was still only a fraction, though, of the $5.4 trillion of spot trading volume recorded on the top 10 sexes in Q1. But it's a crazy figure nonetheless, especially considering that these are real asset flows we're talking about and not levered derivatives contracts. On the derivatives front, though, perp DEXs saw approximately $800 billion of trading volume in Q1. This is up almost 40% from $572.6 billion in Q4, and it's also more volume than was recorded in the entire year of 2023. Now, of that $800 billion recorded in Q1, around $550 billion came from a single exchange, and no prizes for guessing which one it was. Yes, Hyperliquid continues to steal the perp DEX show, and indeed market share from everyone else. The app chain survived several rounds of FUD to reach a market share of 73% in March, up from 35% in October. It says a lot about Hyperliquid that Jupiter remained the second biggest perp DEX through Q4 and Q1, despite its market share plunging from 18% in November to just 5% in March. Meanwhile, DYDX, aka the old guard of perp DEXs, looks like a murder victim. DYDX was the #1 perp DEX this time last year, with a market share of 31% in February 2024. But 1 year on, Hyperliquid appears to have eaten every last crumb of its lunch, because this has since fallen to around 3%. Moving on, we're glad to report that DeFi's share of the overall crypto market stood firm at just under 3.5% in Q1. To put this into perspective, DeFi's association with Ethereum could have left it on shaky ground, considering the washout that ETH experienced this year. And indeed, the total DeFi market cap fell by 19% from $119 billion to $96 billion. And according to CoinGecko, ETH's underperformance in Q1 was responsible for $20 billion of this loss. The report's breakdown of DeFi categories tells a similar story here. Overall TVL was down by almost 23%, lending down 19%, restaking down almost 37%, and liquid staking down 39%. In fact, 9 of the 11 DeFi categories named by CoinGecko ended Q1 in the red, and most deep in it. So, perhaps you can see why it's encouraging that DeFi's losses in Q1 were no larger than the rest of the crypto market. On a related note, multi-chain DeFi TVL took a 27.5% haircut in Q1, down from $177.4 billion at the end of 2024 to $128.6 billion at the end of March 2025. Now, most of this loss can be attributed to collapsing altcoin prices, and as you might imagine, this means that Ethereum lost a bigger portion of its TVL than most other major chains, down 35.4% from $112.6 billion to $72.7 billion. Solana and Base also suffered heavy losses, with TVL dropping 23.5% and 15.3% respectively. But despite this, both networks actually increased their TVL. Meanwhile, Q1 also saw the launch of Berachain, whose TVL rapidly increased from 0 to $5.2 billion at the end of March. Notably, this means that Berachain has flipped Base to become the 6th largest chain by TVL, which is quite an accomplishment in just 3 months. Although, as the report points out, Berachain gave itself a large head start with its Boyko pre-deposit vaults, which attracted $2.3 billion in day one liquidity. Berachain also makes for an interesting contrast with Base here. Base has been the top Ethereum layer 2 for quite some time now, and with a market share of 13%, was the third largest chain by DEX spot trading volume in Q1. TVL, however, is a different story. Base comes in 7th with just 2.3% of multi-chain TVL. That's well behind BSC's 4.7%, Berachain's 4%, and Tron's 3.6%. All right, folks, now I could keep reeling off numbers from CoinGecko's report until the cows come home, but I think that's probably about enough for the moment. Q1 is now firmly in the rearview mirror, and BTC looks like it could be turning over a new leaf. I'm sure I don't need to tell you that if we get a high timeframe candle closure above $100,000, the party is likely back on. In that case, I'll look forward to sharing a much more bullish Q2 roundup in 2 months' time. But, on the other hand, BTC could touch 100K and get rejected, leaving only a wick rather than high timeframe candle closure above it. This would be a pretty bearish sign and warrant a more cautious approach. You know how it is, folks. When BTC sneezes, the whole cryptoverse catches pneumonia. So, here's to a healthier crypto market in Q2. We hope it will be a swashbuckling comeback story. But while the market is still slow, why not learn something new with our report on the global race for mineral wealth? Okay, that's all from me for now though. As always, thank you for watching, and I'll see you next time. This is Guy, over and out.